Good day, ICT traders. Good day, folks. This is Divine FX Capital, and today I'm going to be teaching you guys on the power of the higher time frame. If you are a newbie here and you have been finding it difficult to trade using the higher time frame, and you have been finding it difficult to get the bias of the higher time frame because in this forex you are seeing here, in this forex, you need the higher time frame precisional direction. You need the higher time frame precisional movement to take exceptional trade and make good profit. So, the forex market is full of confusion, and the forex market is full of people that cannot trade because they don't know how this algorithm work. They don't know how the market moves from one point to another. And today, this is the reason why I'm going to be teaching you guys the power of the higher time frame key level, the power of the higher time frame. And what are they? In the forex market, you need to know where price is going to. You know where price is currently, and you need to know where price is, because all these things make up the price algorithm. Because if price is moving to a particular direction, and it is only the higher time frame that will give you the perspective of what the big boys are doing. It is only the higher time frame that will break down everything: the monthly time frame, the weekly time frame, and the daily time frame. You need to pay attention to these time frames, which are the monthly time frame, the weekly time frame, and the daily time frame. So without wasting much of your time, let's dive into the chart. Let me give you an example on gold. How to take trade using the higher time frame and how powerful this time frame are. So on my chart here, looking at this chart, this is a gold trade. And please, before I continue, please kindly subscribe to my YouTube channel, turn on the notification button to get more vital information and great educational teachings whenever I drop them. Thank you as we proceed. And this is gold, and I'm on the monthly time frame. Whenever you want to start your time frame, your top down analysis, or whenever you want to take a particular trade in a particular day, go up to the higher time frame, because the higher time frame is where the liquidity is. The internal range liquidity and the external range liquidity, the buy side liquidity and the sell side liquidity, they rest in the higher time frame. So this is the monthly time frame, and from the monthly time frame, what can you see? Gold is currently bullish. Gold is currently bullish. Why is gold currently bullish? Gold is bullish because this candle closes above this candle. The second candle closes above this candle, showing you the bullish momentum. This is the reason why gold is bullish. You don't need to get confused in anything. You don't need to get confused in anything. This is what? This is a bullish market on gold. Don't get confused. Now, the monthly time frame have showed me what gold is. The monthly time frame is bullish. Now, let's go to the weekly time frame. After looking at the monthly time frame for the direction, you go now to the weekly time frame. From the weekly time frame, what are you going to see? Because you have already known that price is highly bullish, the precision of price on the monthly time frame is bullish. Now, the weekly time frame is going to give you structure. It's going to give you structure, higher highs and higher lows, point of interest, fair value gaps, order blocks, all these institutional reference points. These are what you are expected to see on the daily time frame and also on the weekly time frame. So from the weekly time frame, if I should zoom in carefully, please pay attention to this because it's going to help you in your trading journey. From the weekly time frame, you can see what happened. Price came and traded into a fair value gap, which is called a buy side imbalance, a buy side imbalance, sell side inefficiency. Price traded into this fair value gap extensively. Price traded into a bullish order block. You can see this black candlestick here. This is a bullish order block. And what else? Remember your premium and discount. You want to buy when price is at discount, and we want to sell when price is at premium. in order not to get induced by the smart money. Now, the second thing to do is to pick up your fib level, measure from the swing high to from the swing low to the swing high. What can you see? Carefully, you can see that obviously gold traded into a deep discount. It is called an optimal trade entry zone. And what happened? That zone is rested into a discount area. Now, we can now go ahead and buy gold because it is aligning with our rules, it is aligning with the algorithm, it is aligning with how the big boys move and how they operate. Now, going forward to the daily time frame. Remember I told you that you need the weekly time frame, the daily time frame, and the 4-hour time frame to get your directional precision and the order flow of the market. What can you see? When you get to your daily time frame, you need to mark your structure differently. This is the power of what? Higher time frame. Higher time frame has the liquidity pool. Higher time frame has the key levels where you are going to take good and precise trade. Marking your structure differently from the daily time frame, you can see that from the daily time frame we have a break of structure. This is a break of structure from the daily time frame. Break of structure bullish because we are in an uptrend. Remember what I said, price traded into an old high with confluence with a fair value gap, which is known as IOFED. In other words, known as institutional order flow entry drill. Now you have gotten the key level on the daily time frame. This was supposed to be a market structure shift, but this market structure shift didn't come with what? It didn't come with displacement. And secondly, the higher time frame has showed us that price is what? Bullish. So therefore, this market structure shift is not going to work. It's not going to what? It's not going to work. Price traded into this IOFED, and where is it going to? We have a draw on liquidity resting above. Buy side liquidity. This is a buy side liquidity. Now, remember that I've passed through the monthly time frame, the weekly time frame, the daily time frame now, this which is where I'm currently situated at. And now, knowing that this is the draw on liquidity here, that money is resting here. Liquidity. What is resting? What is liquidity? Liquidity is simply what? Money. Liquidity is simply money, where money is resting. That is what liquidity is. And now we are going to go down to the 4-hour time frame to see how the market misbehaved, or to see how the market behaved and know how to take trade using our entry strategies. Now, from the 4-hour time frame, which is our big boy time frame, the 4-hour time frame is the time frame that is going to tell you whether you are going to buy or whether you are going to sell. In other words, the higher time frame is going to tell you whether price is ready for a buy movement and price is ready for a sell movement. Now, when I went to the 4-hour time frame, what did I see? I saw that price cleared liquidity, price cleared sell side liquidity, which is called inducement. Smart money are inducing retail traders to induce them, to manipulate them to come down into a key level before buying. Now, from the 4-hour time frame, this is now what we are going to be expecting. Watch how price reacted from this area. The moment price traded into this key level, the moment price traded into our IOFED, what happened? Price came up after clearing sell side liquidity. Price came up. Price came all the way up, retraced, went up again, retraced, accumulated for a short period of time, because this accumulation is simply telling us that the buyers and the sellers are fighting. They are fighting in the market, trying to know who is going to be in control. As you can see, the buyers later got control of the market. Why did I say this? Because you can see the massive momentum of price, how price broke above this relative equal highs here and shifted structure. This is known as our market structure shift. Price shifted structure here, which is also MSS, or you can call it the change in the state of delivery, or you can call it our market structure shift. So when price shifted structure now, this is now our point of interest. What are you now going to do? You pick up your fib level, measure from swing high to swing low, because this is current dealing range. We call it dealing range in ICT. A particular range where price is dealing at, is situated at. The particular range whereby we are expected to see our trade, we are expected to frame our trade entry from. That is what we call dealing range. It is simply the swing high and the swing low. Please don't get confused in what I call the dealing range. It's simply a current swing high or swing low where you're expected to see price trade into either premium or discount before you take a buy. Now, what do we have in our discount area? Now, you know the PDRA we have, where we have the fair value gaps, our order block, our breaker block, and so forth, and so on and so forth. And on the weekly time frame, I mean on our discount, what can we see? We have a fair value gap. We have a fair value gap here. We have a fair value gap here, and also a bullish order block, which is at what? Which is at discount. So our expectation now on gold, we want to see gold trade down into this area, give us a 15-minute shift of market structure. Whenever we see a 15-minute shift of market structure, we do what? We buy up to this area. These are now liquidity areas. These are liquidity areas, our first target, and also our second target here. This is how to take trade using the higher time frame, from the weekly time frame to the daily time frame, and also to the 4 hours time frame. So now we are expecting to see our market structure shift on the lower time frame to buy gold. Let me go into DXY. Let me go into DXY and show you guys an example of why higher time frame is very, very powerful. This is DXY from the weekly time frame. From the weekly time frame, what can you see? Remember, I said that the weekly time frame is our first time frame. We are expected to see price trade into a key level. And what are we expecting in the higher time frame? Remember, I said that we want to know where price is going to. We want to know where price is currently and where price is likely going to trade into in the future. And from the daily time frame, you can see that price traded into a bullish order block. Price traded into a bullish order block. This is where price has traded into. Now, what are we going to do? Price traded into that bullish order block, cleared liquidity. We have liquidity resting here. We have liquidity resting below here. Why is my network very bad? So we have liquidity resting here. This is known as inducement. This low is the previous yearly low, and price came back and retraced into that low, into that key level, inducing retail, taking out these liquidity areas. People are buying here, and a lot of people are buying here. Pending orders are situated here. But what price? The price cleared them. This is a liquidity area. This is a liquidity area. This is a liquidity area. Price traded into that order block extensively. If you see clearly, we even have a fair value gap, which is known as our buy side imbalance and sell side inefficiency. Price traded into the fair value gap, and what happened? You can see how price have been creating a rejection candle. Look at how this candle closed up with the wick. This is a rejection candle. Now, the second thing you are going to see, remember I said we are now going to go down to the daily time frame, because the daily time frame is our second time frame. We need 3 time frame to take or to determine a trade setup, to determine a good A plus trade setup. This is to show you that the power of the higher time frame is very, very great. When you understand the higher time frame, you are going to understand how to take good and precision trade in order not to get confused and get induced by this market. Now, what can you see from the daily time frame? Remember, I tell you, from the daily time frame, you need to mark your structure differently. Now, what can you see from the daily time frame? Remember, watch how price reacted. The moment price traded into that weekly fair value gap, we now continue to have break of structure to the upside. This is a break of structure. We have the first break of structure, which is our market structure shift. Now we have a break of structure here, the second break of structure. And what can you see? Remember, I told you guys, premium and discount. You buy from premium and you sell from discount. Watch how price reacted from this area. The moment price broke the first structure, it traded into a fair value gap at discount. Now gave us a new break of structure again, traded into a fair value gap. Remember, fair value gap is part of the institutional reference point. This is a fair value gap, price traded into it. Now, we are going to go down to the 4-hour time frame to get our confirmatory signature. Now is the confirmatory signature. Now, when we go down to the 4-hour time frame, you can see we'll be expecting our shift of market structure, which is going to be from the 4-hour time frame or the 1-hour time frame. The 4-hour time frame is not clear, so let's go down to the 1-hour time frame. From the 1-hour time frame, what can you see? Price is definitely ranging. After clearing this liquidity, we have liquidity resting here. What the price did, price came and took it out. It is called liquidity sweep or liquidity raid, or you can even call it turtle soup. Price came and cleared liquidity, and what happened? Price is ranging. You can see how price has been ranging for the past, since last week. Price has been ranging, not giving us a bullish movement, not giving us a bearish movement. So in order to take a buy on DXY, on foreign currency, we want to see price shift structure. The moment we see a shift of market structure on DXY, it's a buy, and the retracement, we buy into the higher time frame, draw on liquidity, which are these highs. This is our first target, and also this is our second target. Because the DXY is inversely correlated with the foreign currency, now you can now start selling EURUSD and GBP/USD because they are inversely correlated. GBP/USD is going to be doing the opposite of what the DXY is doing. You can see how DXY traded into that area, into that fair value gap. At that same time, GBP/EURUSD is trading into a rejection block. And what is happening? Price has been ranging along this area. So we want to see a shift of market structure bearish. The moment we see our shift of market structure bearish along this side, shift of market structure bearish, and price coming back into internal range liquidity, we sell down to this draw on liquidity here. This is going to be our first target. This is more like a top-down analysis, but it's going to teach you a lot of things in the market, and this is also our second draw on liquidity, our second key level. So you can just wait for price to come here, then you do what? You sell EURUSD. The moment you see a break of structure or a shift of market structure bearish and price trade into internal range liquidity, you sell EURUSD down to this key level. So thank you guys for watching up until this time. My name is Divine FX Capital. Kindly watch and subscribe. Please, I beg you guys to subscribe to my YouTube channel and turn on the notification button. Kindly come frequently to my channel to learn on ICT concept, the concept that is going to take you far to your destination. Thank you for watching up until this time, and God bless you.